For me, it started really early on in my mid-teens, actually as a fundamental approach to begin with that developed into a quantitative approach. I find it really fascinating that you can use logic to make money in the markets, and I also firmly believe that this is the only predictable way of doing it. There are many components making TCM successful in trading the markets, so this is a fairly expansive question. My favorite area really is that TCM has a quantitative approach, weeding out a lot of the what would have been losing trading signals, meaning that it reduces a lot of risk and increases return. We look at patterns for one, sure, liquidity for another. We look at correlations between different financial markets and instruments as well. Now, we don't look specifically at what other people are doing because, to be honest, we don't know what they're doing and they don't know what we're doing. We get the inputs, however, about what most people are doing through analyzing the mentioned characteristics of the market. So everyone gets the same information to play with, we just analyze it differently. We look at many different metrics, such as drawdown, for example, but in combination with other metrics, such as, for example, internal correlation in the portfolio. It's important to build from the ground up, looking at the risk first and using the decreased risk to create the return. It's also very important not to overtrain or over-optimize anything, or any of those many traps that so many quantitative traders fall into. When deploying a new strategy, the first step is to take it through a number of stress tests and checklists to make sure that it works the way it was intended to. From that point, we paper trade it to see that everything works mechanically. If that's satisfactory, we take it to a live trading environment, but betting really small, scaling it up as we go, and ultimately a full allocation in the portfolio. To establish what strategies should be trading live in the portfolio, we monitor each and every one of them to see the equity status, meaning that we see if any individual strategy is performing sideways or is in a drawdown. From there, it needs to come back up above the trend line again, and if that happens, it gets allocated back in the portfolio. If not, we've avoided a big loss and are happy with that. I'm confident that we can continue to produce good results, simply because we never assume that we can tame the market in any way, shape or form. We also have a very rigorous routine when it comes to research and development. I'm really happy with the results so far, and we navigated through some really difficult markets these past few years.